Welcome to today's Daily Report Market Analysis videos with me, Richard, Market Analyst at Hantec on Wednesday, 22nd of Jan. There's been a slight recovery, really. We saw yesterday that markets were sort of edging towards a less risky appetite for how they were positioning, and it certainly looks as though there's been a bit of a recovery in that move. You've seen for example, dollar yen was lower yesterday for the first time in a while, actually, but it's rebounded a little bit today. We've seen the gold price, which is falling over. We've seen treasury yields, which have just opened a little bit higher today. So a degree of support coming in for risk appetite, and you can see that through equity markets also finding a degree of support, but nothing too decisive. And you can see sort of initially here, we saw treasury yields moving higher, but that move higher is just unwound slightly in the last few minutes, and you can see that European equities actually are not showing all that much on the upside. They were a lot, quite considerably more higher than they were than they are now early in the session. So just a little bit of a consolidation potentially, but it's interesting that the markets have sort of priced in some of the less decisive negative risk appetite factors, such as the Hong Kong downgrade by Moody's, the IMF downward revision of its global growth forecast. Those sort of factors tend to be very short-lived, but it's more, I think, the coronavirus, which has the potential to be more considerable than perhaps it is at the moment, because obviously it could exacerbate quite considerably and turn into an epidemic, and then really affect market risk in terms of confidence, and that could affect how equity markets go, for example, and sort of the safe haven plays could benefit off the back of that. So there's a bit of a question mark around that at the moment. Now, with regards to where we're sitting in terms of data points today, not a great deal until this afternoon, where we do have the existing home sales for the states, which are expected to improve by 1.3% in December, back to 5.43 million, and also the Bank of Canada rate decision, which again the Bank of Canada is not expected to do much with, sitting on its hands at 1.75%. So that takes me on to my chart of the day, which is silver. Now, silver has been a little bit of an interesting play actually in the last few weeks. It's sort of threatened to form a top pattern. It recovered from the 1764 level back earlier in January, but that big, sharp, negative, bearish bearish outside day candle that we had yesterday really has sort of put that topping pattern back right into front and center in terms of focus, and you can see the 50% fib level, 1767 area, been a basis of support for quite a few weeks now, and again finding support around that January low of 1760. So that today is holding that support line again. However, it really is coming under pressure. And you can look at the momentum indicators. They do not look all that great, do they? The RSI sitting at that 50 mark again, but that is below where it was earlier on in January. And I think if it goes below 50 on a decisive basis, that really would suggest that the market is breaking down in terms of turning corrective. But look at these MACD lines, bear cross tracking lower, stochastics turning lower from a pretty low level as well. So the momentum indicators do not look all that great, and the sort of read-through effect, you would say, from silver breaking down below 1760, what does that do for the gold rally? So silver is still hovering around at the moment. You could argue a bit of a near-term ranging affair, but certainly what we have is that momentum indicators have just started to edge more correctively in the last 24 hours or so. And how the market responds to this technical rebound this morning will be interesting. You've got a basis of support around that 1790 area, a little bit of a pivot area there. So if that again comes in as resistance and the market turns lower from there, you could easily see silver putting pressure back on 1760 and then potentially below. You'd be looking at the 61.8% fib level at 1740 area, and also this pivot line around 1730 then comes into play. So interesting times for silver, and also the read-through for what that means for gold. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.